What's up, everybody? I'm not talking. We could have an audio check, though. Hello, hello. Are we good? Should be able to hear me. A little confirmation check. Cool. What's up, brother? So we got 3 minutes till we open. I'm in this right now. This short. Okay, so if we kind of look, I'm just following this. Want to see this sell side here be tagged. The sell side objective. We can take a quick look at why we're doing this. 1 minute fair value gap. So we have, let's go 1 minute. We're at 1 minute fair value gap here. This shaded area though is a 15 minute. So notice we have a 15-minute fair value gap. Breaker, high, low, higher, high, broken, YouTube model. Right, we close underneath the new week opening gap. So now as we come down to that lower time frame, right, the new week opening gap is here. Should pop up shortly. I don't know why it's not showing. Go to 2 minute quick. There it is. So there's that new week opening gap. We trade up into that. We reject closing through this low as well as here. Right. So now as we go back to that 1 minute, we leave that bearish fair value gap there as we reject from the 1 minute. Notice the perfect precision into the high of the 1 minute fair value gap. Closing underneath means that's balanced, right? If we're going to aim for lower targets, premium should hold. We are coming into 9:30. So I wouldn't be surprised to see maybe a quick run higher, maybe to run out this high before attacking this sell side. Either way, especially because we're so close to this low now, especially with these equal lows here like this. Too clean in my opinion. We should reach down into that, clearing now this sell side and this sell side here. As far as that, let's look to the left now. So actually we'll wait for the opening. So I just want to see real quick how we react at the opening. Perfect equal lows. See if we can get through that. Right, we're holding this fair value gap still. We've hit the high of it perfectly. Close below it. So honestly, I wouldn't really want to see much higher than that. If we're going to go higher than that, we'll probably create the Judas swing first. Right, let me look like a 5. No inefficiencies up until here. 2, 1. We have an inversion here we could look at. So wouldn't really want to see this. Inversion would be as high as we can go. At least anyways, I'd ideally want to see just that high if we're going to come for these lows still. But that's the objective here this morning. First return into the inversion. Right, you'll see that we close below it here on this candle. First time we close below this fair value gap. So this is the first time we've came back into it. It would make sense for us to hold now, get into these two. There it is. So pretty typical, right? Easy to follow that. We understand it's 9:30. We've already engineered equal lows. We're just near this external range liquidity. We're showing that we're rejecting off of premiums, holding YouTube model, breaker, inversion. So pretty clear cut there. Right, I'm out at 5 handles. So this original short this morning off this fair value gap. Not bad start, right? Candle above the swing high, just targeting that sell side. Had a solo to 47.71. Where was that? 47.71. Ooh. Oh, high ticked it. That is heartbreak. That's the worst. Worst case scenario for sure right there. So now we want to see, all right, do we continue the bearish expansion? So I'm going to clear this. Now we can kind of zoom back out real quick, get our bearings. All right, we have, okay. Let's go to the left. Let's clear some of these. Not all over your face from yesterday. Go like this. All right. So pure price action here. Failure swing, breaker closed under, breaker closed under. On the high, break lower. Okay, so we're gonna go 4-hour fair value gap, full closure potentially. First objective here. Break that down. What's in the 1 hours? Mitigation block here at this high. Have we hit that yet? No. So I'd look for this at least. Cool. Let's go back to that 1 minute for now. So for now, here's a few objectives. Let's move that 15. Inversion held nicely. But we would look for this level here first, which is an old high. All right, so if I'm kind of taking the mitigation block of it, we'll show you what I'm looking at. Go to 1 hour, low, high, higher, low, then broken. Right, so opposed to a breaker, we have a mitigation here instead. Just refining it to the actual up close. Right, the highest high, give you an easy target to reach for. Of course, we could always break this down, so I'll leave this for now, and then actually throw in the levels. So I'm gonna go like this. A little easier to follow that, not as crowded. All right, so we should be good now. We got some sell side objectives labeled. This is the 4-hour fair value gap we're within. So on the 1 minute time frame, we've closed underneath consequent encroachment, to me showing an early indication that we want to reach for continued sell side objectives. 2 minute, we'll have a fair value gap there. Potentially, we need to wait for that actually to close. But the 1 minute did leave behind just a small fair value gap here. However, even though there is a fair value gap here, because this candle created such a large wick, right? We wicked lower, retraced, hit that consequent encroachment, and then closed underneath the wick. Ideally, we don't even return above that wick. So I'd look for us to hold this area, which would mean this fair value gap should become a breakaway gap until we reach that objective, right? Once we hit that high, we could bounce, but until we get to this level, that should stay open. Leaving that 2 minute open as well, which would be nice. Cool, cool. Yeah, we should get into that low. Let's go to a daily. Okay. I like that level as well, because actually if we go to a daily real quick, I'm going to refine that to see if we fit that. So we have a daily level here, and notice we've actually hit that perfect. Which is why we're seeing this hesitation here, okay? So this is the mitigation block on the hourly. This level here, however, is the actual daily high, which is what we've delivered to perfectly. So we're bouncing off that daily high. There's a fair value gap here as well. So a daily fair value gap low, which is why we're seeing hesitation. The fact we've already pushed so far through that daily fair value gap, though, makes me think we want to reach fully for it. I'm going to readjust the 4-hour fair value gap we have now to actually accommodate the daily. Okay, so now a little better representation. Daily fair value gap. First of all, notice the reactions here, right? That's why we're trusting the inversion. We can move this since we've already hit the low. So bouncing off daily fair value gap low into that wick. I didn't actually realize this was the low. So although, right, I wanted this to remain open, because we are coming off that daily fair value gap low, we may actually return into this. So I had missed that the first time, right? Wanted to see this level. Understand we're bouncing off a key level at this point, however. So if we want to give a retracement into an inefficiency, that's here. Notice that consequent encroachment of that fair value gap is perfectly consequent encroachment of the daily fair value gap. When I see something like that, not really random in my eyes, right? Too precise to be random. What's going on here on a 30? Look at this order block right here. That's interesting. Pushing right up and through that, to me, is an indication that actually we may want to come back for highs. So we had this mitigation block. Daily level's going to be more important. Take priority. So we don't actually need to come in here. If we want to hold from here, we've gotten above the last premium prior to that run lower. I often talk about using that as the inversion, to where if we clear this fair value gap now higher, we immediately want to see what reaction we get now at that inversion. Especially leaving behind that 1 minute fair value gap like that. Interesting. So now my attention has gone to this discount, right? Because we're showing that we pushed up and through the premium I wanted to hold. We get it up and above the bearish fair value gap, getting back above the daily fair value gap as well. Right, we are holding a volume imbalance. So we still need to be wary of the premiums that we're currently trading within here. All right, so we've hit that premium. Also, we can go really high, low, highest high broken. Like if we were to kind of go to a 2 minute chart, or maybe 5 is a little easier to see. 2 minute. From this swing high to this low to this high. I like that. Right, breaking lower. So we have that breaker here still, which can hold us. Get us into the objective that we're kind of looking for. Playing around daily fair value gap. Getting back above that consequent encroachment has me think we want to go higher, to be honest. We really shouldn't have cleared that level, even though we're holding this volume imbalance here. I don't want to see, like, if we're going to go lower, we shouldn't necessarily see candle bodies start closing back above this daily consequent encroachment, in my opinion. I'm going to move this wick for now. I'm going to clear it up. Same with this. But that's that 30-second OB we're looking at. But since we've hit this premium, and now we can look at the range from this high to this low, that's really its own range. Right, that high to low. Let's take a main fib. We came back into the OTE already. That was paired with that volume imbalance. Closing back underneath consequent encroachment. That's why I'm saying if we're going to run lower, right, if we want to actually attack this low, get into this level here, kind of get underneath, right, that daily fair value gap level, then we really should have no need to get back above consequent encroachment now of that daily fair value gap. Ba-da-ba-da, ba-da-da-da, ba-da-da-da. So see if we can't get into that sell side, sell side, sell side, sell side. Dollar looks to be going up. Don't really care about dollar too much. NQ on the other hand, bearish. So that's a good sign for us. Yeah, NQ selling off pretty heavily. You want to see ES catch up here now. That is what we would be looking for. Let's see. So we're short right now. Just one. We're seeing if we can't get into, I mean, 5 handles really is all we're looking for. Just ends model. 47.58.75. There's that sell side. Here's where we can get tricky, however, because sell side is here. I'm gonna go break even right now because we can actually hold from this. Completely reverse now. If we don't get to my 5 handles, that's fine. Just one contract. If we do, obviously nice TP hit, but really this was kind of our objective here, that mitigation block. So look at how we wick the daily fair value gap, we wick the low and the mitigation block. If we can close below any of those, primarily if we can close below the daily fair value gap, I think we can get into my target, get us out. So let us see. Right. Not what we want to see there, but we understand why we're basically finding support here, right? Higher time frame, key areas of support, liquidity cleared, and there goes our, let's see. We'll see if we can't hold it. Give us one more run. What we'll really do, right? We don't want to be greedy. If we can run that low one more time, we'll just get out at that low. So now we've engineered a little short-term swing point. Short-term sell side. Should be able to run that. Close our entry. To be completely honest, depending on how this candle closes, I may go stop here. So if we put it in a new swing point, if this candle closes underneath, basically this candle's open. Oh, it doesn't matter. Cool. So there we go. There's our exit. Give me the swing low exit though. So let's wait 1 second. Because now I want us to hold and go higher. Just so we can get that swing low. You know what I mean? Same entry. Good shit, brother. NB. That's brisket, right? I think you messaged me that once the other day. Is that you, Brisk? Yes, sir. Cool. Welcome, welcome. Ah, no swing low, no swing low. That's fine, though. All right, so we get into that liquidity. Once again, entry coming on. I guess we'll start from the beginning. From up here this morning, this entry, right, different count. YouTube model, early indication, we're going to run lower, holding the 1 minute, holding the 15-minute, breaking lower, holding the bearish fair value gap. All right, so we're just following price. This is how you can establish the narrative. Price has shown an unwillingness to break through premiums, instead holding premiums while creating reversal signatures, the breaker. Right, so notice once we get below the breaker now, we're actually getting inside the daily fair value gap, leaving behind another bearish fair value gap that gets respected, breaking underneath consequent encroachment of the daily, early indication. We want to get through that, as we mentioned, leaving behind the fair value gap there. That's important. That's where we get short. So short came right on that consequent encroachment. Stop above the candle here that creates this volume imbalance that I have. Right, so we got pretty close, to be honest, to our stop loss, because my stop is right above this candle. Got close, not close enough. End up getting out 5 handles at the low here. That's all in all, nice setup using the bearish fair value gap aligned with higher time frame daily consequent encroachment in an already established bearish order flow. So now we wait again. Back to waiting. Trade and wait. That's the game. If max position is 2 and I got 2 in, I should be able to market close to partial, right? Yes. Market close 1 will partial you out. So now we wait. Yes, ES, brother, sorry. It's a little blurry. All right, we came back into this premium here. And now at this point, like I mentioned, right, not in a rush to get back in. We can follow price to try to still just be on sides. But once we hit targets, I'm a lot more conservative with my just executions. I'm someone that likes to trade middle of the range into external ranges, not necessarily one that catches like tops or bottoms using YouTube models like that. So now that we're here, obviously we're showing that short-term consolidation. Like if I went to a 30, even a 15, you'll see that consolidating here. To be honest though, so we look at clean edges, that's too clean for me. So even though we're not going to execute into it, right, we still follow price. More jagged edges here, right? Run up to clear out some highs here. This run up to clear out some highs here, returning into this premium. But now notice all these equal lows. Little suspect. I think we come into those lows on a 15-second. Let's stay on this. Right, we're holding now that mitigation level. Notice that. It's a dynamic support and resistance. I want to show you something quickly. Okay, projections for downwards targets. We look at this manipulation leg, okay? I'm looking at this run here that runs into the inefficiency to clear out the liquidity. Take that low to high. We project that lower, lo and behold, look at the second standard deviation here. Boom. All right, so there goes that low like we were saying. But notice where the second standard deviation is. Here. All right, it's not a surprise that we're holding at that level. If we can get under that, I do think we reach for, right, this here, and potential lower lows. Look at this 15-second setup, though. So I'm going to move this. I mean, isn't that so clean? Right, perfect delivery there. We run the lows. However, we never close underneath. We then, what do? Well, we gap the 15-second volume imbalance here, creating a slight inversion. Immediately use it lower to punch up and into now that premium. So we're really just following price here, tape reading. Right, we got our entry. Low, high, lower, low, broken. 15-second chart breaker. Notice what we did. We come into the breaker. We blast up and through into the 15-second inefficiency. Inversion. What does the 15-second do? It uses the 15-second to now attack the buy-side liquidity. So I hope y'all seeing how this stuff is fractal, right? It might be moving a little quick if y'all aren't used to, right, reading price here on such a low time frame. But you're seeing the absolute precision that is taking place even on this lower time frame, right? It's not random. It's not surprising. We've created equal highs here now. Let's go back to a 1 minute just to see. We have equal highs here now, holding that original volume imbalance. So just like here, right, these equal lows were suspect, too clean. I want to see that get ran. Well, now these equal highs here, too suspect, too clean. Want to see those get ran. Unfortunately, we're still holding the daily fair value gap. So as much as we want to see something, we still need to do what price is, right, giving us. Holding the daily fair value gap. We've already gotten underneath it once, which is an early indication we may want to continue to get underneath it. Right, which if that's the case, as we say, we have all these areas here. So this is a 1 hour fair value gap. I've simply taken the anatomy of it. Oh, no, I lied. These levels here, so I'm going to move the standard deviations. Just wanted to point that out, right, to see how you can use it as targets. These levels are the mitigation block broken down. So the quarter levels of each. One thing that is interesting, okay, we have a huge gap. And when I say a huge gap, I'm talking about the regular trading hours. So let's go back quick. So far, everything in here bearish, right? Obviously. I'm going to kind of move. We don't need this. We don't need this either. But now let me show you regular trading hours. Look at this. From the close to the open, we haven't even got into that at all. So now I think, right, price tends to want to just at least return into gaps, even if we're not saying we're going to come all the way up here, but just slightly. Right, price tends to gravitate into those unfilled gaps. So I think with this consolidation taking place around this mitigation block level, the continued sell-off this morning, would not be surprised to actually see, let's go back to electronic, one more run on the lows, right, a run lower, some type of reversal to now get back into that regular trading hour gap. And that is, let me kind of label the high of it just so you guys can see. Right there. So basically it's the daily fair value gap. So that aligns nicely actually. Okay. So things are starting to come together, building a little bit of a narrative, as one would say. NQ obviously just shit in the bed, gone. Lower, lower, lower. Which is also why I think, like, if NQ gives any type of retracement, ES should retrace more aggressively. But of course, we need to wait. All right, we'll continue to follow price now that we've gotten to this key area. All right, once again, remember, it's the 1 hour. It's the high of the mitigation block. That's what this level is. You can see we're hitting that. Dollar did end up pumping up, kind of like we were looking for. So that's one thing to be wary of. Dollar pumping, usually indices sell off. And Q already showing a huge sell off. Closing under here, and this makes me think we go lower. Watch the volume imbalance. Let's tape read a volume imbalance entry here quickly. All right, so with our volume imbalance, we enter there, stop above candle that creates volume imbalance. Easy mechanical strategy, because if the volume imbalance now closes, right, you would close that. If it stays open, we let it rock. Daily fair value gap level. All right, so closes the volume imbalance, which means we close that position immediately. Immediately closed. Let's see, NQ still bleeding, right? Just bleeding, bleeding, bleeding. Dollar rallying. Makes me think ES wants to get lower. High resistance though, but I do favor lower price. If I had to pick, I actually think we will go for this low one more time. Even though it's all wick, right? So notice on the even, let's see, the 15, especially the 5 really shows it. If I hide, I'll look like this. So far anyways, we might break that now. But notice, not one candle has gotten under that daily fair value gap. So as you said, I think we come for this low. Any candle closing underneath this daily fair value gap will be a good indication that bearishness will resume. We closed underneath that. Okay. Really want to short this right here. Nah, no need. Still kind of choppy. We'll do this. We'll paper it. All right, fight the urge. But I think we use this level short, to be honest. 2.5 handle, kind of the typical stop into that. Obviously choppy, right? Which is why I'm hesitant entering. But I'm leaning towards lower prices, so I still want to give it some type of thought experiment, let's say. So no risk here, no trade. Purely reading it. As I said, we can see this, but because we've hit this objective, I'm not really in an interest to try to go in here. I need a guaranteed or more of a established trend break, right? An obvious break of structure, something to give us an indication of where price wants to go. Because right now, just wandering, right? Aimlessly wandering. We can try to anticipate based off current price action where price may want to go, but I'm not trying to enter purely off anticipation. Right, want to see it. And good thing we didn't, because once again, back up and through. Now we're getting tricky because, right, we're kind of showing us long here. As we mentioned, I like this regular trading gap. This candle here. Really where it opens. So that's this buy side. Interesting. We'll try paper trading this here. Right, what are we doing here? Obviously going paper. Because like I said, I'm not confident fully. I just don't really want to give back what we already had. I like this setup, however. Because even though we have this low here, a lot of times, right, we get caught on thinking lows have to be ran out. So I don't want to get caught in that thinking. We've already hit a higher time frame discount. So now we've held this low, created a failure swing, while at the same time, low, high, lower, low, broken, right? So YouTube model, breaker here. I don't think we're going to get the entry, though. So you understand the logic, but we might just pump. Missed the entry by a tick. Ain't that crazy? What you mean, you just close fully or what? So what are you doing, Brisket? You have 2 contracts open. Let's say you're going long. And you had 2 contracts open. What are you pressing then? Just curious. So you're trying to close one and it's closing both, is what I'm assuming? I did want to try this, actually. Let's try this. If we're going to be bullish, that's what this is. Target this high potentially. We've cleared this buy side. Notice we're still holding at this volume imbalance. If we can get above this, I think we run. Because we notice, right? How many times have we come into it now? Once, twice, 3, 4th, 5th time not being able to get above. If we get above it, this is what we call like my flip point, right? To where price is obviously showing an unwillingness to get above that. If we do, I consider that a change in the state of delivery, right? Because we have now blasted through that barrier, and then I would look to use that as support to deliver into our higher objectives at that point. So from here, right, what we usually do, 5 handles put you at 69, sell 1 partial, if we can. But once again, notice, right, wicking the daily fair value gap, we can't get above this. So I'm looking to the left and I'm looking at all the old premiums on the way lower. If we're in a buy model, those premiums get traded through. Right, so first, this one, I like that. We got through that, and then we use it. That's where I'm entering, the original short. Second one is this volume imbalance. Ideally, we get above that. Third one would be this 1 minute, right? Because we use that to get short. So if we can clear all of those, as we're saying, we should have free reign to keep on delivering into buy side. So I'm going to hide the 15 and the 1, because at this point, really just want this buy side. Buy side here. One tick short of TP. Oh, okay, sorry, Briss. Let me see though. I click to sell limit 1 or market sell 1. Neither work. It's giving me an error. What do you mean? Yeah, I don't know. I guess I'm confused. Like you're about to make me enter a trade just because on my funded account. So I gotta help you. That'll be heartbreak. One tick, I mean, not even one tick short. We hit the high perfectly. That's the classic. At this point, right, we want this to hold now. Like this. So this becomes breakaway gap. Don't want to see that. Which means stop can go really below this low. So no risk at this point. Or barely any. We'll go actual no risk. No risk. Yep, and there's the... Okay, cool. So partialed out. Beautiful hold off fair value gap, right, with the wick. That's what we often speak of. Wick paired with fair value gaps are BPRs. So we shouldn't get any lower than that. That's why the counterbody's holding. We're above the daily fair value gap now, which makes me want to... Nah, we'll just play it. So like I said, we already partialed out. Stop in profit. So if we get stopped now, we could care less. And notice, right, we held this. So even the partials are at logical areas of where we held before. Going back to this discount. If we get stopped, right, we can look for another opportunity to get in again. BPR can be that small. Yes. Right, because it's fractalized. So we have to think in a fractal sense. Which when we come up here, right, this wick itself is a range. Like I wonder if I can go to a lower time frame. Right, so if going up and then coming back down, that in itself is a range. So when we now clear that range, right, I would see that as balanced because we already repriced lower and then left it. So if we come back into it, that means more than likely we're going to want to return for lows. Right, so if we close underneath this wick, I think we come back for this low here. So far we're holding that wick, which is cool. Closing under consequent encroachment, however, is already kind of iffy, but we have a 1 minute fair value gap inside of that. So like if I move the actual wick, right, we have this 1 minute that's holding us, which is why I'm allowing a deeper retracement into this. But the fact that we close below that wick already makes me think that we may want to use that as resistance to run out lows here and here, right? In essence, stopping us out. If we can get back above consequent encroachment though, that'll be good because now we're also right here at this reclaimed fair value gap bearishly. So we need to get above all these premiums to resume bullish activity. Cool. So it's like we were saying here, right? If we can get above this one now, we should, same idea, continue to run. Same way that we find resistance here. But once again, look at that. So we're running into that consolidation, right? Expansion leads to consolidation. Lower time frame, consolidation here. but I think we get stopped. Look at how that's holding. This low should not be breached. So I can go here. If we're bullish and we want to come to this high, this is my point of invalidation right here. This swing point, because it's the swing point that returns into the discount. This fair value gap holds the volume imbalance. And now we close above this premium. Right, so I'm seeing this as a protected low. If we get through that, we're out. If not, we should run. Because price is choppy like this, we're going to partial one more at a swing point. Can you explain how to identify that fair value gap as a breakaway gap? Sure, brother. Another partial, beautiful. Protected low holds. Now this low is protected, so we go there. Final TP right at this point. Final TP, we could care less. Majority of the positions closed. Stop in profit. This is just an extra treat. Right? We've already taken the lines portion off. Now we chill. So yeah, we can cover the breakaway gap aspect. 1 minute, okay? So when I'm looking at this here, originally you saw I'm trying to enter on that fair value gap, right? Because we create the YouTube model, short-term low cleared, break in structure, and now we leave a fair value gap here to use. However, when I see the next candle, right, immediately push up and through consequent encroachment here, and more importantly, I'm looking to the left at old premiums. So I'm looking at this fair value gap here, right, where we originally got short. That has my eye, that fair value gap, as well as this one here, because it's paired with it. So I'm looking at these two fair value gaps, the bearish and the bullish overlapping one another, because we use them to get lower, and we're using them here as resistance. So the same way that we're speaking of the volume imbalance in this fair value gap, if we were to get above this level, especially because it's consequent encroachment of the daily, which is a key area, right? Closing above all three of those fair value gaps while leaving behind this bullish fair value gap, to me, was the indication that now this fair value gap here has no interest in being returned into. Because if we truly think about it, this high here now can be looked at as a BPR as well, right? And why is that? Well, I mean, lo and behold, look at the candle bodies there, right? So that's not a surprise. But when I see this high as a BPR, that is because on this original run lower, we run lower, retrace this high to this low. Look in this leg, there's no inefficiencies in here, right? Do we see any? The only inefficiencies are these ones. And they're already repriced into. Price went up and down, up and down, up and down, up and down. Right, so we've already had plenty of back and forth within here. So once price shows that willingness to leave, that's why we understand this will become a breakaway, because we've already balanced all of this price range. We're closing above the daily consequent encroachment, which means we shouldn't really return below that. And we left a fair value gap aligned with it that's also aligned with these two others. So you see how we built this narrative to where all of these discounts now are in this one area. This is the high probability entry, right? And that's why we are okay going long there. So right as we hit that consequent encroachment, that's our long. Understanding now this fair value gap will not be traded into unless, right, we've already reached our objectives, which we have. So you really have to be able to utilize, right, the left side of the chart. Because I know for me personally, I probably would have been stuck waiting for an entry here and never would have got it until price ran into this, maybe 8 to 12 months ago. So I wouldn't have been confident using this Or honestly, I wouldn't have seen that, right? I wouldn't have seen this fair value gap or this one. I wouldn't have been able to correlate that with the daily fair value gap. So it's just a process. But hopefully that somewhat can kind of answer your question. Right, I'm always looking at PD arrays. So if we're violating old PD arrays that we have used bearishly, I would expect those to hold us bullishly now. So if we're violating PD arrays, right, higher than old bullish fair value gaps, that's when we expect those to become breakaway gaps. Because we're breaking away from the consolidation. And if we're in a hurry, we shouldn't return into it. Let's clear up all of this nonsense now. So you can kind of see, right, what our final trade ended up looking like. Even notice, whoops. Notice here, did we get underneath that volume? We did, okay. Honestly, I'm looking at this fair value gap now. So if we get back above this, this may be a potential inversion setup. Right, short-term highs cleared, run lower, but notice at this low, we never actually close below that. So a lot of people ask, right, what's the difference between a market structure shift and a run-on stops? For me, it's the way the candle closes. This candle wicks this low, closes back inside the range. To me, I'd rather have this candle close below to establish bearish order flow and then use this to get short. But because we didn't actually close below, I just have to watch, right? If we hold this now bearishly and run lower, then it'll give us another opportunity to look for another short, because more than likely now we're clearing this bullish fair value gap. Right, if we did that, we're closing underneath consequent encroachment now of the daily once again. And that should allow us to short into maybe that daily low. Mitigation block low. We'll see. Okay, now just let me partial one. What? They're playing you, bruh. And the volume imbalance. Interesting. Dun, dun, dun. All right, let's see if we get. We are hitting this now, right? So as we said, breakaway gaps can be hit after objectives are met here. So objectives have been met. We're returning into that. This is tricky because we could hold here, resume bullish, but we'll still try to get short. I don't know how we didn't get entered here though. We try to use our volume imbalance entry because we opened here and never came back up, but we hit it perfectly and never actually gave us the entry. Unfortunate. But now we'll see. 5, let's see what the 5 is. Yeah, we'll let this rock. See what we get. Oh, that's a lot of losses, brother. But he hit me with a 1, 2, 3, 4. That's funny. Lost machine. You had to copy and paste that, right? I'm like, if you were just typing that out, that's a lot of typing. So I want the inversion with the volume imbalance. The price may actually just use the bearish fair value gap here. All right, same, didn't get in. It might give us a retracement. That's why I'm leaving it there. Because we haven't hit our objective lower yet. So I'll leave it. If we run into our target, then, right, we'll move it. Do I only trade? Oh my god, this guy's going crazy. Are you good, brother? I don't understand. But yeah, I trade ES purely because, in my opinion, it just moves a little bit more precise. So I traded NQ early on because it moved more. It had larger ranges, which I thought I needed and able to be profitable. I felt I had to capture larger moves so I can make money. Whereas now that I understand kind of what I'm looking for, right, I'm more precise. I like ES because it allows me to use tighter stop losses and kind of be more consistent with just the entries and exits. So notice we're holding that fair value gap perfectly. I'm looking at this inversion, but I'm also looking at this bearish like this. If we close above those, I'll just close immediately. Yeah, we can do some higher time frame stuff. Clear all this though, so you can see. I guess what do you have anything specific you want to look at the higher time frame? Bro, who's this guy? Is this guy very bored? To me, Jesus is bored today. Yeah, I feel you. Sometimes I'd be bored too. Ah, that's fair. A troll ball. Interesting. We just gotta let him rock. I was like, I've never used YouTube. Can you like stop people from doing that? So we push right and through that. So that makes me think, as we said, we come into this discount, hold it. Let's go for buy side again. Oh, Jesus. Okay, I did not mean to do that, fellas. 23 contracts. Chill out. Let's close 20 of those. $23 contracts. That's comedy. So we're under both inversions at this point, here and here. Because now this, right, is a Ferrier swing, so we see buy side here. Midpoint is 5 handles. Okay. So we'll go consequent encroachment of that wick first partial. Still, right, we got through this one time. Getting above it even once is why I think, I mean, no. Because for our one candle opportunity, we get right back below it. So take it back. Surely you can block him. Here, let me see if I can block him. How do I do that though? Oh, I probably have to be in YouTube itself, I'm guessing. Let's go to YouTube. There we go. Okay. I think I got him away. That bastard. All right, so let's see where we're at. Can we please analyze higher time frames? Speaking of volume imbalance, apart from 930 volume imbalance. Okay, let's look where y'all at. Apart from 930 volume imbalance. 930, bam. Negated volume or fair value gap creation. Fair value gap volume. Do you also do what? All right, Francis, hold up. Let me see here. Just trying to understand the question. So apart from the 930 volume imbalance. Oh, you're just asking a general question. Okay. The last volume imbalance of a structure break. I mean, I guess yes would be the question or the answer to that question. I'm guessing you mean something like let's take this bearishly, for example, even though we don't count it as a bearish break. You're saying like, since this candle here got lower than this, we would look at this volume imbalance as a potential entry zone. Is that what you mean? Just want to double check. React tube. Yeah, we'll look at the 4 hour for you quick. All right, 4 hour sense. Pull this back up. Jesus. All right, let's hide that. 4 hour sense. We're underneath the 4 hour consequent encroachment. We've closed below that. Seeing that makes me believe we want to continue into the low of the 4 hour completely, which would be this area here. If that's the case, right, obviously continued lower delivery on the 4 hour. We have a fair value gap on the 1 hour, however. So let's label that out like this. So we're back down to entry now. Fell short again of the buy side. Look at that, right? Once again, we cannot get above that fair value gap. Yeah, 4 and 1 hour bearish. Right, even though we're holding this level, the fact that we close underneath the 4 hour fair value gap like that makes me think we use it as resistance. Immediate rebalance here now. We have a 1 minute fair value gap here, but this is a case with, I'd want to see this. If we were going to run lower, this should be a breakaway gap in my opinion. Because we hold this fair value gap, we engineer this low. So I wouldn't want to see much lower than that. Like this. Go like that. Oh, there's so much going on now. Okay, so first, what do we have here? Just want to clear a little bit. Because we have the 15-minute breaker here. Is this the 1 hour? Okay. So we don't want the 1 hour to be traded into, so we move that. High, low, highest high, broken. 15-minute breaker here, paired with new week opening gap. New week opening gap as well. Right, that's why we're smashing into this area. I'm gonna move all of these. I don't know why it's not popping up though. Oh, there it is. Okay. So yeah, I want to see us get into that new week opening gap again. We're smashing into this 1 minute fair value gap just below that, but I think we can get into there. Right, notice on this 2 minute, we've returned into a 2 minute fair value gap here, aligned with the daily fair value gap. First time we come into the inversion and we hold it, so that's nice. Right, look at this volume imbalance. We're hitting this as well. We're gonna move that. Just clear up some price a little bit. Don't need those or that or that. What's that? Mm-hmm. Basically, whatever happens here, we'll wrap that up on the day. Oh, you're good, Francis. Let's see. You're basically asking which volume imbalance do you pay more attention to into price action? Okay, that's fair. So I guess the volume imbalance I pay most attention to would have to be a volume imbalance that's created inside of bullish structure or bearish in the given direction. So what I mean by that, let's take this for example, right? We're gonna kind of have to make it up. But let's say, right, we created this YouTube model here, and instead of a fair value gap, there was a volume imbalance. Right, so we're kind of having to imagine, but let's just, right, for the sake of the example, let's imagine that this, instead of a fair value gap, was an actual volume imbalance like this. These are the volume imbalances that I trust the most. Are volume imbalances that are paired with already established order flow, let's say, right? So it could be an order block, could be a breaker, YouTube model, really anything. But if we've given us a bullish structure that I like to see, and then there's a volume imbalance with it, well, I like those a lot. Trying to find one like this morning that could have played out well, but nothing really. Yeah, those premiums are holding hard, right? There's that. What's that breaker? Did I take it down already? Oh, I had the breaker somewhere. 15-minute. There's the 15, but the breaker is. What did I put the breaker at? Oh yeah, there it is. Stop loss. Ooh. Stop loss. Stop loss. Boom. Stop loss. All right. So we're still holding those premiums, right? Ugly delivery, but price is showing an unwillingness to get there. Which for us means we quit forcing it. Oh, don't do that. Bruh. Look at that reaction. I'm weak. Let me hit a stop loss. Hold up real quick. Let's see. was like, we're gonna go one final. I just want this high here. See if you leave a fair value gap right there. I lied. This will be our last little execution for the morning. Right, we leave this fair value gap as we close above the daily fair value gap. We spent a lot of time lower. Right, cleared liquidity, cleared this short-term low. I'm weak. Look at that. Welp. Look at that. We finally got above this fair value gap. That kind of makes me think this might be a breakaway gap, honestly. Let's see. We'll leave this here, but we may break away from here, leaving that open, using this to get us into consequent encroachment in that buy side. It's kind of the vibe we're feeling. If we can get that to the fair value gap, will give us our entry, but I wouldn't expect that if I'm being honest. I think we go straight for buy side from here. Oh shoot, I'm not even. Let's see. How much time took you to get consistent? 3 years. No, I'd say like 2 years. Consistent to the fact I wasn't a losing trader, I guess you could say. That was about 2 years, right? Break even. Consistently making money, that was about 3 years. So I had a whole another year before I finally was able, right? From breaking even until I was able to actually make profit, and that was about a whole another year. Maybe we'll give us a run into our fair value gap. Notice that we held this, right? And why is that? As we said, important key area, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times it holds us. 14th time we displace through it. To me, that immediately means that we want to reach for this high. And just like we couldn't get above it, I feel like we wouldn't want to get below that level now until that buy side's met, which is why we would have to go long here. But say we use that entry, right? I didn't do it because we'd have to like have a super tight stop, and then the TP would be not even 5 handles, so it's not worth it in my opinion. Which is why we just leave it kind of in case we do want to get that run into that fair value gap. But as we said, more than likely we don't even get there. Like look at this volume imbalance. Let's kind of play out a volume imbalance entry quick. Just a quick scalp. So the volume imbalance entry, what that is, right, for those that aren't familiar, when we open with the volume imbalance like this, oftentimes if we're bullish, right, that will stay open, so you can enter as it hits the candle's close. This one obviously completely negates it. I'm looking for that fair value gap. But right here would be another volume imbalance entry. So when we open here, as soon as this candle taps this candle's close, that's a long. Stop below the candle that creates it, and if it stays open, you stay in. If it gets closes, you close it automatically. So there's that daily fair value gap touch. Let's see if we can get one more run into highs. I don't like that we got back under this, to be honest. Such a strong area of resistance. Getting back underneath that. I'll give it consequent encroachment. But lower than that. If we break from this again. We got into that gap, right? So we reached the gap we're looking for. I want to get that buy side. Now that we've gotten into consequent encroachment, if we get any candle closure back above fair value gap, I go stop right underneath fair value gap. But look at how we're using that as resistance, right? So I don't like that at all. We need to get up and through that, or else we go back down. 30-second. Let us see. Hard day. Yeah, a little choppy, honestly. Choppier day. Got to really be precise with the entries and exits. 10:02 fair value gap looks like silver bullet. 10:02. What's that at? Way over here? Oh, right there. Yeah, I can give you that. Into buy side there. Fair value gap into buy side. Boom. So stock goes like that. Do we want 5 handles or buy side? We just go buy side. So we can get out. There it is. Go ahead, brother. Get us out. Heh. They don't want us to be great, fellas. Not the one tick. Oof. Now we break even. Because at this point, I don't like that we ran that. This fair value gap should hold us. If we get lower than that, right way down here, I don't want to be in it. So risk-free trade. Let's see how we end the day. And that's because we're running this, right? We're wicking this, and look how we close inside this range. So I don't like seeing that at all. High resistance, even if we get there, oh well, I could care less. Right, choppy price action. There we go. So we'll end the day on that. Fall one tick short of our exit. That's fine. Stopped in profit. Not bad, not bad. Overall, well, we'll share the one setup we had this morning. So following, let's clear all this now. Don't really need this. Right, so following this morning's order flow, as price holds this 1 minute fair value gap, we hold that, we break structure, engineering a new 1 minute fair value gap as we leave a higher time frame 15. Right, let me kind of pull the 15 back. So after holding that 15, right, we leave the 15 minute with that 1 minute fair value gap. That holds perfectly, delivers us lower. Once again, bearish fair value gap holds, delivers us lower through consequent encroachment now, all the way into the low of that daily, creating a perfect low right on that daily fair value gap, suspect to us. That becomes our sell side. As we retrace into consequent encroachment, we get short since it's paired with a bearish fair value gap as well. So now we have the market structure shift lower, old low acting as resistance, daily fair value gap, consequent encroachment, and 1 minute bearish fair value gap. So a lot of premiums here. As we said, stop below, above this candle that created this volume imbalance here. Like this. So we return into the volume imbalance, hold our stop loss, and then our exit became that 5 handles. So we exit right on this candle, right on that low. And that was really all that we had, right? We were content with that. A lot of choppiness obviously followed, which, yeah, we just had really no interest in being in. We shared a paper trade earlier, but this was really our main entry, right? We can I guess we can run over the paper trade entry. Right, so now with this entry, YouTube model short-term low cleared, break in structure. As we mentioned, this becomes a breakaway gap for the time being, because when this candle closes above consequent encroachment, it leaves behind a bullish fair value gap, perfectly aligned with consequent encroachment of the daily, right? So that, like I said, isn't random. Consequent encroachment of this 1 minute is consequent encroachment of the daily, exact same level, not a random level, especially because now this inversion, exact same level, right? So where you see all these levels are the exact same, heavy indication, high probability setup, right? We get long right on the swing low, partial out at 5 handles, partial again at this swing high, stopped in profit. I'm going to try to go back in, stopped to break even again, gave it one more opportunity here, stopped to break even again. So overall, profit either way, choppier after our initial run lower, but kind of expected that, right? We're just playing around that daily fair value gap. So in a daily sense, if I went to like a daily, right, it's just going to be a wick. We're wicking the daily, which is why we have all this price action in here. Ultimately, I do want to see higher prices, however. This high, and like we said, I want to see this consequent encroachment. So this buy side pull here is my final objective. But yeah, we'll leave you guys with that today. As long as you don't have any questions, we'll wrap up the stream. Appreciate y'all sitting in for the live one. Always cool. Tomorrow we'll have another live stream for the members. So if you guys want to kind of join the actual membership, get the live streams every day. Link is in the bio. Not a needed thing, but if you're someone that wants a little more in-depth understanding or just to be around us every day, there's that. Until then, have a good day, everybody. Next YouTube stream will probably be next week sometime, next Tuesday, I assume. So until then, have a good day. And yeah, have a good weekend. We'll talk later. See you guys.